Well, Ronak, welcome to the show. To start, could you share I guess, a little bit of your background in commercial real estate and what inspired you to co-found MedCoShare?
Yeah, Brett, first of all, thanks for having me. So my background is commercial real estate. I started in brokerage, and that's where I represented buyers and sellers of commercial real estate properties in Philadelphia. Um, at that time, I was also representing doctors that wanted to rent space, and that's where I saw the inherent problem between landlords and doctors. So landlords want long-term leases. They want you to take a predefined amount of space. So that doesn't really allow for flexibility that docs need when they're first getting started, right? So doctors want just a little bit more autonomy, but also flexibility in the space that they utilize, or they may not want to be restricted to a long-term lease, and that's basically the opposite of what landlords want. So the impetus of founding MedCoShare is, why don't we provide the landlords what they want? Is basically we as MedCoShare will take a 10-year lease with them. We'll give the deposit, we'll do the fit out, and then we'll make the space turnkey, which allows the doctors to come in and rent on a part-time or full-time basis. So we're kind of like the middleman between the two, and we solve the problem on both sides. So a traditional lease, right, you're going to be tied up for anywhere between 3 to 10 years. Oftentimes you're contributing to the fit out, or you're giving a large deposit to offset the cost of the fit out if the landlord is doing it. We get rid of all of that. So we are on a month-to-month membership agreement. And so doctors have the flexibility of just trying out the space. Or if they don't know how much space they need, they can start with one room and then go on to multiple rooms. You can also be part-time, which is really tough to do in a traditional lease model, right? So like if somebody wanted to practice just once a week or twice a week, you can't really do that with a lease, because at that time you're getting the entire space, right? So like it solves a lot of problems, and it really helps doctors get started a lot faster. And I know this, podcast has a focus on like investing, and the way I see it is, saving money is a way of investing as well, and saving time is a way of investing as well. So with us, you can get started in less than a week, and your upfront cost significantly diminishes. So just to give you an example, our starting point for our spaces is $625 a month, right? And it goes up to anywhere from that to a few $1,000s depending on what package you get. So you can start with us for 625. And you compare that to what you would have to do just to get a lease. It could be
Oh
a
man.
deposit of 10,000, 20,000. I personally have done a deposit of over 50,000 to get a space. So I know what that's like, and I've seen and I've done other deals where some of these costs up front are a killer. Dr. Kavalak in our King of Prussia location, right out of residency, he wanted to do DPC, but finding that space was an issue. And he told me, as soon as you open King of Prussia, we want to be basically your first member, and he was. So as soon as we opened, him and his partner took our full-time room, and they've been practicing there ever since. And so they've never went, the route of working for a large practice or working for a hospital. They knew exactly what they wanted to do right after residency, and this really allowed them to not have so many upfront costs, right? To get in at a fraction of what they would be paying otherwise. So I think that's a great success story, and that's like the story that we want to kind of emulate across the U.S., right? So our strategy now is, we pick a market, put 3 or 4 locations in that market, and then move on. And our large vision is to be a national company. Currently, we're in 3 states, but the goal is to be, pretty much in every state in the U.S. We are currently actively fundraising a seed round. So we're looking to raise 1.25 million on WeFunder. So the website is wefunder.com/MedCoShare, and basically all the funds would allow us to grow in terms of locations, but also in terms of services. And I think this is a great avenue for doctors to also invest in, because it's a problem that they know, and we're solving a problem that a lot of people in healthcare already know exists. And if you're a member and also an investor, you get a discount on the membership. So we've also had a few members who've invested in the company, and then they get a discount for a year off the membership price. Whenever we open a new location, we have the expense of furnishing it and fitting it out. So that's one. But then the other expense is just marketing that new site. So then we spent, a good amount of time and energy marketing it and trying to fill it up as fast as we can. So each location takes about 100 to 150,000 to open, and it's split between payroll costs, sometimes travel costs, furnishings, and then also marketing. Then on the services side, a part of the funds that we raised will going to go to increasing the amount of services that we can provide. So right now we focus on marketing, but there's so many more services. So providing MAs in all our location is another service that's going to be really helpful to docs. Helping them out with EHR, billing and scheduling. There's a whole variety of things that are needed to start and run a practice. And our goal is to kind of be vertically integrated, where a doc can come in, start a new practice, and we have all the services they need to be fully functional. The way I like to say it is we're a private practice accelerator, right? So you start
Absolutely.
with us, and our goal is to, let's just, give you the support that you need to grow this as fast as you want to, right? And some people are happy with one location, but we actually have quite a few providers that will go in multiple locations of ours, so because they want to get a diverse patient pool. So South Jersey has a different patient pool, right, versus 𝗘𝘀𝘁𝗁, versus Philadelphia. So they're able to, with one membership, right, open in 2 locations, in 3 locations. And I think that's been really helpful, because if you think about if this didn't exist and they wanted to be in those 3 locations, now you're talking about 3 long-term leases or purchasing the real estate. So now you're talking in the millions versus less than $5,000. The retailization of healthcare is happening at a higher level at this point, right? Because just of hospitals consolidating, private equity money coming in, buying a lot of large practices. So we want to kind of be the alternative option to that, right? Doctors shouldn't feel like their only option is to either work for a hospital or be part of this large practice and eventually get bought out by a PE fund. So the trend that we're seeing is that there is a lot of dissatisfaction amongst the physicians, and they do want autonomy, they do want flexibility, and doctors have different stages of their life as well, where their needs are different, right? So we have several physician moms who maybe they want to work part-time when they have a new baby. They don't want to be full-time going from hospital to hospital, having long weeks, right? Because they have a newborn at home. Or maybe you might have a retiring physician who doesn't want to retire completely, but he doesn't want to be full-time, right? So we are the perfect solution for that. And I think providing this flexibility is a trend that's going to grow. And I think the younger doctors and new doctors that are coming in, they're going to appreciate this a lot more.